Well, the European Central Bank has decided to keep interest rates at record lows, even with policymakers mindful of record high inflation. They are sticking to the gradual timetable for winding down bond purchases later this year, with rates expected to go up after that. While the ECB is trailing the BOE, the Fed and other central banks, which are raising borrowing costs to counter rising prices. And Rosie Burchett joins us now from Brussels. Rosie, the ECB is holding rates now, but not for long.
You're right. Christine Lagarde, the chief of the European Central Bank, has been speaking and continues to be briefing press as we speak. She says interest rates will remain unchanged for now. However, we have had new news from her to confirm the timeline. The schedule looks to be the following. The European Central Bank will continue its asset purchase program until the third quarter. And from there, Christine Lagarde says interest rates will change sometime after that. But she has not given any specifics on what that kind of exact timeline could be, whether it could be a matter of weeks or a matter of months. So still some uncertainty there in terms of where it's going next. But this, of course, was supposed to be, Liz, the year that Europe got back on its feet after the pandemic. We've seen COVID-19 restrictions falling left, right and centre across the continent. But of course, the war in Ukraine has simply flipped those hopes and ambitions on their head. And now we're seeing record high levels of inflation, soaring energy prices across the bloc. So some great period of uncertainty there. And Christine Lagarde, the ECB chief, says that uncertainty is weighing heavily on businesses and consumers.
Yeah, Rosie, and what do EU countries want? Surely rising inflation is a major concern.
Well, some central bank governors in countries including Austria, the Netherlands, have spoken out to say they want to see an interest rate rise now and not just in that medium or longer term that the European Central Bank chief has laid out. Now, that really is because they're seeing these record high inflation levels currently at 7.5%. They want to see that kind of put the brakes on that by an interest rate increase at the moment. And as you mentioned also, the pressure is coming from outside because the European Central Bank is starting to look a bit like the odd one out. We've seen interest rate rises from the Bank of England, from the Federal Reserve in the US, most recently from New Zealand Central Bank. So some pressure also coming from there, from externally, as we see the ECB starting to look to be taking a kind of a slower path and continuing on this cautious path forward that Lagarde has laid out so far. So no big news, no change today, but pressure mounting.
Rosie, the ECB also addressed a potential eurozone recession.
So this certainly is a major fear looming all over Europe. And of course, we're talking in financial terms. But what this rising inflation rate really means is that people are struggling to pay their bills, struggling to pay for fuel. And what Christine Lagarde says is that how the economy develops will depend entirely on how the conflict in Ukraine evolves, on the impact of sanctions against Russia and counter-sanctions, and also really on what the further measures could be. And one of those big further measures that's being discussed and hotly debated is a full embargo on Russian oil and gas. That's something Ukraine is pushing for, but also some EU member states, including Lithuania, other EU members, including Germany, have shown more reticence. And that's precisely because we've had some analysts warning that that full embargo could plunge Germany into recession. And Germany, as the biggest economy in the European Union, would obviously have major implications then for the EU and the eurozone as a whole. Now, Christine Lagarde did say today she's keeping options open there. So the ECB saying they will do everything that is needed to fulfill its mandate. So options still remaining open there. But as I said, serious fears looming about that economic future. And as we see more reports of atrocities like those reported in Bucha and in Ukraine emerging, the pressure to introduce tougher sanctions will also increase further.
Well, many thanks for that, Rosie Burchett in Brussels.